Dipan Mehta, suddenly
Yeah,
it's
Nikunj,
looking
good afternoon.
suddenly it's looking murky, right? I mean, who would have thought that we will see this recovery? And when the recovery came, the markets have taken a sharp turn in 2 days.
Yeah, Nikunj, I didn't think that the recovery was going to be sustainable, although I was surprised with the spring back up. But I think that the basic problem remains with the market, that being deteriorating fundamentals. And that's evident in the micro factors like corporate earnings and the macro factors also, which came like GDP growth rate, trade deficit, as well as now we are seeing a rupee depreciation as well for whatever reason. So it's just that the fundamentals are steadily deteriorating and the markets are reflecting that. No doubt there's a lot of money to be invested and a lot of retail participation is there. But end of the day, fundamentals do matter. So I think that markets remain in a corrective mode. It may be more of sideways, more deeper correction. One can't say, but you need to be a bit cautious and get into some amount of cash if you're already not in cash. Signal, I would say 15-20% of your portfolio thereabouts, I would say.
Technologies is perking up. There was a note again of Jeffries this morning wherein they had increased the target price quite substantially. So finally that stock is inching higher as we speak at the highest point of the day. And KPR Mill is the other one that continues to gain traction. Kunal, on the charts of these two companies, KFin and KPR Mill?
So KFin, I don't track, I'll skip that. But KPR Mills is something which is looking attractive. In fact, the third or the fourth consecutive day where the stock has seen higher volumes. Today's volume so far, for example, is around 38 to 40 lakhs on the NSE, and in the last 3 or 4 days, the average volume is around 20-25 lakhs on a daily basis. Compared to that, the average volumes were just about less than 1 lakh or 1,20,000 odd on average. So that tells you that the kind of buying which has happened in the last 4 days, the price appreciation which synchronizes the buying pattern, indicates that this trend is here to sustain. So the starting point of this 3-4 day high volume move for KPR Mill, that becomes the base for the stock, which is around 1020 levels. And so far the stock is above all its key moving averages, 50 DMAs, their 200 moving averages. So that indicates that the trend is here to sustain and probably build also further for KPR Mills.
That's the take on KPR Mills. There could be further uptick there. Dipan, what about the Pharma pack? Clearly outperforming today and overall has had a decent run this year. Today, some of these domestic-facing companies, Mankind Pharma, Concord Biotech are also doing well, apart from your usual Dr. Reddy's, Lupin, Cipla of the world. What do you like within Pharma?
I think pharma is doing well because of its perceived safety, and it is actually quite a safe sector to be in, especially when you are witnessing slowdown in the economy and there's so much of uncertainty around the global economy as well. So I think investors are strategically going overweight on the pharma sector. Within that, I think I'd go with the largest company, Sun Pharma. Usual disclosure, we and our clients are invested. And Sun Pharma, I think their entire strategy on specialty products is playing out very well. It's scaling up also in a decent way. And eventually it will lead to higher earnings, and the street also will start to pay a higher P multiple for a superior business model. So that's where we are. There are certain other small companies also, again, disclosure, like we like Kaplan Point a lot. Recently, they have won a very interesting approval for eye ointment as well. And again, over here, I think a very focused business on the Latin America, where it has got very strong competitive strengths and complete backward to forward linkages. So I think that pharma is a sector you should be overweight in. Go for the large cap pharma company. I think Lupin also has done pretty well. And then there are a few select mid-cap companies. And I would also like to keep Strides on our watch list. Something interesting is happening over there as we await the listing of their other subsidiary company. I think it's called OneSource. I'm not clear about the name, but that's something interesting happening over there, which one should keep an eye on.
Okay, we'll watch out for some of these pharma names, Kaplan Point, Strides, etc. on your radar. Naresh, what's the sense on the charts of PVR and Federal Bank?
So PVR tried to make a comeback. We saw a recovery from the same support levels around that 1450 mark. Today we've broken below that. So we go back to the lower end of the range, which has been there for the last almost 3-4 years now. 1250, 1300, that's been the support for the last 2 years. So that could be the next level. Federal Bank has been a surprise. The stock tried to sustain, but could not make a breakout move. So when it was the first one to actually hit a new all-time high in the small cap private banking space. but did not sustain, and we are back into that earlier range of 185 to 200. So we could be, once it stays in this, we again get back to a trading range which lasted for 3 months before.
Apart from NMDC, it's Deepak Fertilizers, which is also down 5%. We talked about Piramal Enterprises and the note coming in from Jefferies, Federal Bank down 5%. You also have Motilal Oswal, Ashok Leyland, UTI AMC, JBM Auto. So a lot of quality names are actually on the back foot at this point of time. Dipan, if you have a shopping list ready, which segments and sectors are top of the list?
We don't have a shopping list ready because the view still remains pretty cautious. But let's just wait and watch. We like this specialized retail companies. They've had a bad time last 2-3 quarters. Companies like Go Fashion, Manyavar, which is Vedant Fashion. Then there is Ethos, and there's Metro Brands. These are all specialty retail companies. You could add Page Industries also. So once we feel that urban consumption has bottomed out and starts to look up, that is one segment that we are watching quite closely. And then we like all of these platform companies and waiting for the stock prices to come down, like Zaggle Prepaid, RateGain Technologies, and then there is, of course, our old favorite India Mart, and then Affle India. So that's why I think we are looking at these two segments and also looking for good ideas in pharma sector. Mankind Pharma also is on our kind of target list over there, and the recent money which they have raised for reducing debt certainly will improve the earnings. And let us see how the new acquisition actually plays out for them. So there are a few ideas, but as usual, our strategy remains trying to find superior quality businesses at reasonable valuations, which as of now they are not.
Dipan, hi, afternoon. Cheryl also joining in the conversation. So where does that leave you with the real estate sector? I wanted to understand what's your view on that one. Do you think that it will be able to kind of replicate the move that it has been seen over the last 3 to 4 years at least now when we enter the new year?
No, I think they have a base effect to deal with, so you could expect some slowdown. But I think the kind of industry dynamics are very positive. And what we like best is that quarter after quarter, the net asset value, or the net realizable value, or breakup value of the real estate companies is steadily going up because of new projects, joint development agreements, increases in land value and inventory value as well. So that's a very positive trend. So it's not that the net asset value is static, that also is growing, and that provides comfort. But I have to say that the discount to the net asset value certainly has come off. 1 or 2 years ago, it's been 30-40% or so. Now it is in the range of high teens or thereabout. But end of the day, it's a nice growing industry. It's one of the few, I would say, bright spots within the entire economy, which is still showing decent amount of sales thanks to the premium properties over there. So I'd like to be overweight this particular sector. Go for larger companies. I think the likes of, say, DLF or Oberoi Realty, or even the Doda company, which is there. So I think those are the companies that one could look at from the point of view of investment.
Okay, point taken. Kunal, yesterday when we were discussing, you were a bit positive on some of these city gas distribution companies. As we speak, IGL has managed to perk up. Mahanagar Gas is inching higher. What would be your view now? Book profits out of some of them or stay invested? What's the take?
Yeah, I would suggest to book profits because, the trends for these stocks is a lot more volatile. We've seen these stocks, moving up by a margin of 4-5% in a short span of time, but then eventually these stocks, they come back into some sort of a selling spree. So, the concern for many of these names was that trends were a lot more inconsistent over the last so many months. When you look at this, for IGL, MGL, etc. Currently, the stocks are still fallen below their longer-term moving averages. So, even after this bounce, these stocks are still trading below their 50 DMAs and their 200 moving averages. So, with that kind of an expectation, I think this bounce should be taken as an opportunity to try and book profits.
Right. But let's put the spotlight then on NMDC actually. That particular counter is in focus in trade today. You had Anisha also market right in the stocks and news that the stock is tanking in trade today, is under immense pressure, and the Karnataka government may be looking at increasing import duty on iron ore. What does this mean and how significant this move is? Let me go across to my colleague Prakash, who has all the details. Prakash?
There's a very significant development coming in as we are learning from our sources that the Karnataka government is mulling to increase duty on iron ore In fact, the process has been initiated and we are given to understand that the state government will take final decision very soon. Along with that, as you were aware that the state cabinet has already approved the Karnataka Mineral Rights and Bearing Land Tax Bill, where iron ore has been separated from the list of forest goods. Technically, forest goods are exempt from duties. Therefore, state cabinet has decided to remove iron ore from the list of forest goods. Eventually, it will pave the way for the state government to put additional duty on iron ore. Of course, it will help a government to generate more revenues going forward. It is important to note that the Supreme Court had already granted the states to collect mining taxes retrospectively from 2005. A very significant development coming in. Of course, the mining rich states will exercise their rights. Most importantly, Karnataka plays a very significant role when it comes to iron ore sector, where it accounts nearly 78% of India's total reserves.
Okay, so that's the latest coming in on NMDC and why that stock is tanking away in the trading session. What else is happening in the market? Let's take a look at the frontline stocks as well, because ICICI Bank, HDFC Bank continue to be under pressure and they are the ones who are the biggest drag on the index right now. Naresh, what's the view? ICICI Bank drifting lower 1300, though today for what it's worth, Reliance is managing to be in the green.
So we've been seeing this rotation happening and nothing really taking the lead. So if you look at ICICI Bank, it came close to the all-time highs. The all-time highs were around 1360. We made a top around 1352 times over the last 2 weeks whenever the index recovered. Now we are back to the middle of the range. The lower end, it has not corrected as much. So 1230 to 1350 has been the range. So for now, we are still stuck till the time we don't cross 1350 and close, the momentum doesn't come back. On the lower end, 1250 remains the major support. Now going into HDFC Bank, that was also a failure in terms of the momentum not sticking up. 1800 has been the big resistance for the last almost 3 years, multiple times, 1750, 1800. Broke out above those levels, went to 1880, and now we are back to testing 1800. Till the time it holds above 1750, would expect it to again make a bounce back.
Dipan, I wanted to understand your view coming in for the cement sector, because this year, the year of 2024, has actually been a year of consolidation for the entire cement sector. How do you see the forthcoming year coming in for this entire space, given the fact that now you will have much lesser players than that as compared to the start of the 2024?
Yeah, there has been a consolidation. No doubt there are fewer players, but it's been a very disappointing year for the cement companies. And we've seen lower prices, stagnant volumes, and all the kind of great rosy projections which were made by the analysts and the company managements that cement will keep on growing at high single-digit volume growth and because of infrastructure and real estate and whatnot. I think those things haven't really played out. And as we speak, I think there's nothing which suggests that the slowdown in the cement industry has reversed. And at the same time, there is massive buildup of capacity coming through, which is going to keep prices on the pressure for a long period of time. And on the whole, I think the return ratios also will suffer for cement industry. So as a group, as an investor, our investors have almost nil weight in cement industry, and that would be our outlook for the sector, to remain completely underweight or nil weight cement. I think a lot of challenges are there within the industry, and there are structural changes taking place which will make the growth rates slow down significantly for a long period of time.
Not yet turning positive on the cement pack, continue to be underweight. Before we move forward, just wanted to put the spotlight on what brokerages are saying for 2025. You have Citi targeting 25,000 as the Nifty target for next year, which is the lowest perhaps. You have next Bank of America at 26,500, Jefferies talking about 26,600, and then Goldman Sachs is expecting that Nifty next year is likely to hit 27,000. Kunal, if I had to ask you, where would you place your bet? The lowest being 25,000, the upper end being 27,000, Nifty 50 for 2025?
I'll take a more of a modest bet between 25,000 and 27,000 is what I would expect the index to be.
Way too safe, not the kind of answer I really wanted.
No, because it's become very difficult in this last 2-3 months, you know. With the,
that's why you're the expert and we're asking you.
So, I mean, I still have another 10 days till the end of the year.
I'll ask you that question again perhaps at the end of the year. Then Naresh, are you better placed to answer that question? Don't give me between 25 to 27, please.
For the end of the year or the next year?
End of the year. End of
End of
next
the year,
year.
I would-
End of next year.
End of next year, I would expect 27,000.
Okay, so at least he had a number in mind. Dipan, similar question to you.
The target, I didn't get the question, sorry.
Nifty next year, and we are just going by the brokerage estimates. So Citi is expecting next year Nifty to be 25,000. There's estimate of 26,500, 26,600, and then Goldman Sachs believe 27,000. What will be your estimate?
I think I'll go with 26,000. It's not a high conviction call. It's just you can pick any number.
Yeah.
But look, there are a lot of uncertainties, and it may reach 26 or 27,000 by the end of the year. But it could be a challenging year, and you may see a lot of volatility as well. One big event is going to take place early 2025. That is the Trump presidency. And they have said so many things, and they want to do so many changes, whether it's tariffs or a lot of other government policies. Let us see whether that actually takes place, because that will kind of shake up the global economy, it will shake up the world markets as well. And that certainly can have implications for us.
Right, so that's the likely target that Dipan is expecting for Nifty come next year end rather. But thank you so much, Dipan, for joining us on the show, for sharing your views coming in on various sectors. But Kunal, I'm sure you will be able to tell this one or give a view on this one for all of our viewers, and that's what's your closing trade.
Yes, absolutely. So it's on Wipro, and interesting chart because the stock continues to be one of the more robust large cap IT names. Still looks very attractive. I think today, intraday wise, the stock has made a fresh swing high, coming back to that 310, 312 mark. So I think if it manages to close above this 312 level, Wipro could be a good BTST as well as a closing trade.
All right, so that's the closing trade coming in from Kunal. Naresh, what's your closing trade?
So that would be a buy on Reliance Industries. The stock is holding up today and is still down good 20% plus from the highs of the year. So expecting it to hold the 1220, 1240 mark.
If you like this video, then like, share and subscribe to ET Now.